There you go. Let me help you with that.
It has started. Okay, now we're kicked off. You guys should be seeing.
I think
Welcome
you
to
guys should.
PML.
I
You
think
guys
you
should
should.
have
I
seen
should
this.
come up here live while we first start, just so that you can.
There we go. You guys seeing the agenda now?
No, now we need you to
You're
put
not
the
sharing
disclaimer
now.
back up.
Now we're not sharing. Now we're going to share the agenda. Boom.
This is
There
the
we go.
entertainment part of the
There
show.
we go. This is the entertainment portion. There we go.
We've only been doing this weekly
Okay.
for 5 years. We'll figure it out one day, everybody.
Yes.
Not today.
Not today. Okay. Good deal, guys. Okay, here we go. Now we're getting everybody come in. Great. Okay. So while everybody's jumping in, let's see, we got a few people rolling in still. So while you guys are doing that, take a look at the disclaimer, right? We looked at it once
I'm,
already
dude,
without you
I'm catching
guys.
crap from people about my office with the lovely water view. Come on. I know it's a pretty good fake background. It's pretty
That's the real
decent.
deal.
Yeah. Oh yeah, this is the real deal. It's
That's the
yeah.
real deal.
Yeah, exactly.
Yeah, we've
Rich
been in his office many
mahogany
times.
in the background.
Does it smell of leather? So it looks like it does.
Where does that come from? Come on.
Anchorman.
Yes. I
My
know I've
office
done that
smells
before,
of
right?
mahogany and leather-bound books.
Ah, mahogany. Yes.
So we're
Yes.
definitely heavy on the entertainment section today, guys, but still take note of the disclaimer. Education and entertainment purposes only. We're off to a banging start. I started the meeting without you guys, and it was the best opening ever. And then we had to do this one. So you guys missed the best opening ever. Um, so with that in mind, let's go through the topics today. We're going
Ken
to go
is
through
going
trades as
fine
usual.
Corinthian left.
Fine Corinthian leather, yeah. Yeah,
Right.
Nadim, I won't comment on that actually right now, but I will write you a text about that. But I can tell you that Austin does have that one. Okay,
Oh,
I'll just leave it at that.
yeah.
Um, so we're going to do trades. We're going to do a quick Easy Street update, and then we're going to get just there was asked to get Phil's thoughts on pool, so we're going to do that, and then we're going to jump right into the Chewy pitch deck, and that should take us to the end. But for the coming weeks, I'm thinking next week we'll probably finally get to HCA pitch deck. I want to take you guys to the railroad industry deep dive that I did, which is pretty cool, and we've got a couple companies that we're digging into there. There's also a request for us to redo the T-bills, T-bill ladders. So I know there's some new folks that have rotated into class. If you're not using all your cash on options, we're rotating through T-bills. So that's a great way to keep the cash working. And then we've got Meta Pitch Deck, Badger Meter, and cyclical analysis valuation coming up on the docket. So that is the agenda.
I
Phil,
think
I'll let you
Travis,
take it away.
I think Travis, the first thing you ought to do is talk to Hunter about his spelling. You're doing a pitch deck on a company and you don't know how to spell the name of the company.
Well, that would be me.
Oh,
That
yeah,
would be me.
Travis. You should talk
What,
to me about my
Travis?
spelling.
That would be me.
Oh my
I
God.
put that in there. I'll take that one.
A highly professional crew.
But I mean, I can blame it on Hunter, but I won't.
That might be Chewbacca's spelling, maybe. He could have been confused with Star Wars.
Oh, funny. Yeah.
Possibility. Possibility.
We'll fix that up.
Yeah. And
But
Nadeem, Nadeem is wondering if I'm wearing Sex Panther. And
uh
of course, hey,
that's
60% of the time it works 100% of the time. Is that how that goes?
Nailed
works
it.
every time.
Nailed it.
What is it? Is that
It's 60% of the time, all the time.
right? And I know you guys love my little background here. It's my background today because I'm traveling. I'm actually looking out the window at Shutters here, which is a hotel I really like in Santa Monica. And I'm looking right at the Pacific Ocean. There's not much of a surf break out there today, but the weather's beautiful. Yeah, I'm leaning up in bed here. It's awesome. This is this is a good way to do your office. So let's get rolling after that really entertaining introduction. What do you say, Austin? Let's do some money.
Okay. Sounds good. So let me share screen. So I got to give a little briefing. We've got TIW students in the workshop or in the class today from the workshop this weekend. And so none of them know what Easy Street is. And so I'll just give a quick high-level summary. We have been building a replacement to the toolbox in the background for over a year. We have gotten to the point where we've released it to all of our advanced students that are in this, but we're not quite at the point where we're marketing it and releasing it to the world. But
Which
if
means you
you,
people,
yep, all the TIW students.
you
But
don't
if
get
you
it.
have a toolbox email, which everybody from the workshop has 60 days access to the toolbox, you will also have access to Easy Street and all of the research features. So think of it as like everything in the toolbox aside from the options piece and what you're seeing kind of right here on the home. That's an additional subscription that we have. And so I really quickly, we've released some new stuff for all of our PML. So I wanted to kind of walk you through some new things in here just so you all can see it. And we have some tutorials. So if you go to utilities, you'll see we have a tutorials tab. If you want tutorials on any of this stuff, we have them right here. Just put up a new scan for stocks tutorial. And so that's the first one I want to kind of walk through. We brought back Phil's 3 circles. And so if I go to scan for stocks and I go
Yay.
to manage my 3 circles, we basically can go through highlighting and trying to find companies that you identify with in your passions. So that's the first one. You can just the more you select, the more you know. You don't want to just select one box. We're trying to group company industries into these different things, and so to be honest, you go to money. Where do you spend money? And then lastly, we have kind of what's your professional edge? Like, where do you think you know more about an industry or sector more than the average person would be a way to look at that. And so, if I was to just select a couple of these, I can highlight them looking through. And, Travis would obviously be selecting this one right here and then go to find matches. And so now in scan for stocks, we have show only 3 circles. And so we're narrowing the list of companies. If I just unwind my filters, we're narrowing the list from about 4,900, call it 5,000 companies, down to, if I just do anything that has a match with me, I've got 45. If I select all 3 circles, it narrows the list down to 233 companies that I can start looking at. And then we've got general things like I could then filter and say, hey, show me stocks that are in a rocket trading zone. And boom, there's 84 companies that are a strong match with me that are populating in a rocket trading zone. Obviously, we have our own internal Easy Street buy price. You still need to calculate your own buy price, do your own research. But we're doing our best effort at getting close and finding these. We could then filter and say, I want to only look at companies that have one of our Rule 1 gurus in there. So I'm going to put one there, and now we're down to 13 companies that are a strong match for me that have a guru in them and that are in a rocket trading zone or an option trading zone. So that's our new scan for stocks tool. Like I said, you want more than that, we've got a little tutorial on it on how to use it. And then we recently opened up our research tab for everybody. And so if I wanted to go research Google's one that we've been talking about in class, I could go to the research tab and we've got a nice summary of what Google is. I can generate with AI kind of, we go into their latest 10K and pull out all their products and services so you can get an idea of what their products and services are. Let's collapse this down. We brought back Phil's moat scores and management KPIs, and then we've got all our balance sheet and income statements down here. Income, balance sheet, cash flow. And then you can go to the competitors tab and we'll pull competitor KPIs and basically show you, our assessment of who we think are the top competitors, and we tell you why we think they're top competitors. However, if you don't like one of them, say you don't think Apple competes with Google, you can remove that. We have some other recommendations that you can add to it, or if you just want to, you can add your own company. You might think that Yahoo, does Yahoo, is it even public? Yahoo? What's Yahoo? Yahoo,
I
is
don't,
Yahoo a public company? It has to be. Yahoo
oh my God.
stock price. What's their ticker? They're
Oh,
not, they're private. Okay, never mind. So there you go. You can't do
there
Yahoo.
you go.
You get you get the idea. You can add a company of your own to this if you just think that it is. So that's the competitors. Insiders and filings operate very similar to the toolbox. There's not a lot to talk about there. And then we've just got, our growth rate and buy price calculators, which have tutorials on them if you want to watch and are there. And so that is kind of just an update of Easy Street. And so let's get into trades.
Yep.
So we
Let's do
had
it.
we had a GDX, gold and silver are flying off of Bessett basically saying that they were going to start printing money and buying back long dated T-bills, which is obviously a dollar devaluation scenario, which, as we continue to devalue the dollar and continue to print money and loan more money to pay off old debts, take on new debts to pay off old debts, a strategy that never works, in all of history that there is.
Yeah.
Um,
People are
gold
getting scared.
obviously is a
I mean,
huge benefactor of that. People are
40
fleeing to gold.
trillion, $40 trillion of debt right now.
Yeah,
40 trillion with a T. It was like 30 trillion a minute ago.
yeah,
40 trillion. Think of what 5% T-bill costs are. That's $2 trillion a year in interest. Geez, Lord, we only collect 5 trillion in debt. I mean, in taxes.
yeah.
I mean, we're heading for the end of the game. It is
It's
coming
getting
fast
scary.
now.
So, gold obviously is a place where everybody's parking cash. And so, if we just look at a chart on GDX, which is a gold miners ETF, we can see that from Bessett's announcement, gold has gone from 75 up to 105 in a matter of, what is that, a month?
Wow.
Yeah, so rocketing right on up,
Wow.
back headed towards all-time highs. And
Yeah.
so, based on all that, this is probably a nice little rocket trade.
Let's
So
do
let's
that.
go ahead and options 10 days out, September 4th. And is it Trav or Phil, you got IB open?
I do.
Okay, so we're doing the September 4th, and it's looking like we can get down to about the 95 strike.
A lot of volatility out there. Okay, we're looking at 48 by 57, so we've got a pretty good spread going here right now.
Yeah, it's saying 53 cents is what we can get. I bet there's enough volume and open interest. I bet we'll get close to that.
Bet you're right. Let's take a shot at it. And what are we looking at here, Austin, in terms of the number of contracts?
If we do fifth, let's see, let's go a little bit more. If we do 17 contracts, it's 160 risk capital. It's $900 in net credit. So
Let's
I'm
go
thinking we
20.
maybe bump that up to 20. Yeah.
Yeah.
That's a 188,000, 1,000 net credit that we'll make on that.
Okay, that'll work. We're looking at, okay, now the spread's tightening up
Yeah.
to
If it
51.
if it goes 53, let's do it. If it doesn't, let's move up one strike.
Okay, the ask just went to 52, man.
Okay, let's move up a strike. Let's just do that. Let's go to the 96 strike, and that'll give us a little more room to make our 20% minimum A work.
Let me change this over here.
And so we do 20 contracts on that. It's saying right now that we can get 65 cents, 25% A work, and that's 190,000 and 1.3 and 1,300 in net credit.
Okay, it's not jumping around as fast, so we're looking at a 61 by 65. I'm going to push it in here at 63 and let my slick broker do their business for 20 contracts. So GDX is what we're doing here on September 4th. So we're looking at about 10 days on the 96 strike put. We're short that strike. We're selling 20 contracts, 2,000 shares. It's going to put us at a requirement of 2,000 times roughly 100 or $200,000. That's in the ballpark of where we want to be. And we'll say go. Right through at 63 instantly.
All right,
So
perfect.
there we go.
All right,
So
so
it
that
sold
one's
20 GDX, step four, 96 puts at 63, Hunter.
I should have let Hunter record that before I clicked off. Do you need me to go to that one, Hunter, so you can
Nope,
just look at it?
we're all good. Thank you.
Okay, perfect.
All right. Good
All
job.
right. So this trade expired out of the money. So I'm gonna go ahead and settle that one. All right, Google, we have a 335 rocket put for 5 contracts. It expired. And so let's look at another rocket put on Google. All right, we can
Up the
go.
chart too, will
Yeah, yeah. So
you?
stock chart on Google, we're looking at it's trading in a pretty big range, but it is trading down. We're getting lower highs and lower lows, so it is coming down. We definitely want to be below 340. It would be nice to be below, it'd be really nice to get a put on below about 325 if we can. I don't know if we will be able to, but that'd be preference.
Man, that's like a two. Oh, wait a second. How many days are we talking here?
Yeah, let me look back. So we go to options, go 10 days out to the September 4th. And no, we're only going to get down to 335. And so on the chart, that'll be right below this first floor. So we do have a floor in it, we've
Austin,
got
you're taking away all the fun I have of
oh,
staggering around looking for what strike might do the work. And it's just, you just tell me instantly off of Easy Street. And it's like, yeah, okay, that's the right
yeah.
one.
Okay, so 335, we're getting below this floor. Let's do that one.
335, my friend, is looking at,
September 4th.
and that's looking at September 4th. We got 10 days on it. You like that one?
Yeah, I think that one's the one we want
What's
to
our
do.
ARC on that?
23% if we can get 209.
Okay, may not get that, but let's see. We'll be close. It's look like 203 by 210. And what do we want for contracts? We're talking
5.
346,000. We want 5 contracts, 160, $170,000 commitment. And let's try to shoot for about 20. What did you need us to get? 205?
We can go all the way down to if we want to go to the bid, we can do the bid. It'll be enough.
Let's go to the bid.
So, yeah,
204.
204. Okay.
Okay, we're looking at Google for the September 4 expiration at the 335 short put, short 5 contracts. That's 500 shares at 350 roughly, which is 170,000, which is just about right. And let's transmit that right through at 206.
Okay.
All right, so we just sold 5 Google SEP4 335 puts for 206.
And there you go. Hunter, let me know when you're good.
She's not good.
He's not good.
Not good.
Oh, I'm good. I got it.
All
Okay.
right, there we go.
All right. And I'll close this one. It expired out of the money. All right. Next one on the docket. We had a Netflix rocket call. Did we roll this? We did roll this, right? This 79, or did we let it get called away?
Let me look. We're sitting at SEP 1883 call.
83 call. Okay. And that one expires on what day?
18th.
Okay. I'll update this at a later time. I knew we rolled it. I knew we put out the trade alert. I just forgot to update it here in Easy Street.
Here's the thing. We are looking at it 8220 right now. We're doing got 10,000 shares. We're doing 2,000 of them at a nice chunk of change that we got paid. Remind me, are we letting this get called away?
I mean, I think we would prefer to just keep rolling up if we can. Our basis is $26 in this, so it's not gonna hurt us. But
Let's take a look at the chart and let's make a guess about where this is going in the
okay,
next 3 weeks.
okay, we're coming off a nice bottom of fib bounce, heading right back up. And so if it breaks above this 81, 82 level, the next ceiling up is going to be about 86, but we need to wait for confirmation or a pullback on that.
Yeah. It looks like we should have a ceiling here for a few days, maybe.
Yeah,
And
I would
a better
think based on
price.
that, we would.
What are we looking at for a roll? Can you?
You said the September 18th
Yeah,
expiration? All
yeah.
right. So let's just take a peek. If we were to buy this, actually, Phil, let me actually demo this really quick. I think we've got roll built in. So what trade do we have on right now? Let me just put this in just for funsies. We
Okay.
have a SEP 18 Netflix call at what strike? The 83 strike.
83 strike.
Okay, let's reload this really quick because it's being slow. All right, SEP 18 83 strike. And I'm just gonna, how many contracts?
20.
All right, 20 contracts. And any idea when we rolled, what we got?
I'm sitting at 202 right now.
Okay, 202. So let's just, for fun, let's look at a roll. And so now if I go to the trades section and I go to this Netflix that we have on, we have the roll button here. And so now we can close this. It says 229 to close. You said it was 202?
That's what we have in it, yeah.
Okay. So 229 to close right now. And let's find a trade to roll to.
God,
And
look
so
at
if we
that.
go out to SEP 31 and we go up to the 84, we could get one more dollar away for a break even. If we go to October 2nd, we should be able to get up to 85, and we can do that for about a break even, 2 cent negative.
What if we go to the monthly?
Okay, August 16. I mean, do you want to go through the earnings call? I bet we can get up and away if we do that.
I mean, if they'll pay us
Yeah,
enough.
let's see. So we can definitely, if we go out to August 16, I mean, we could go up to 87.50 now and get a 14-cent credit.
Now that puts us over that fib line, doesn't it?
It puts us right at the next fib line, right
Uh,
at it. It was an 88 fib.
I like that. And how much are we getting? We're going to get paid on that.
Yeah, we'll get paid 14 cents.
Let's roll it. We'll go
Okay.
right through the earnings, and if it punches up, it punches up.
Okay. Sounds good. So that's not even through earnings. Earnings
Oh,
is
that
one.
isn't even through the earnings.
Yeah, if we go to earnings, which is 88 days out, we could roll this all the way up to 90 and get $1.16 plus the $6 of extra stock price. So do we
Wow.
want to go 80, 87.50 and make a couple? I think we want to just let's go shorter because if we need to roll this again, we'll be able to roll it with this earnings and that'll help us.
Yeah, you're right. You're
Yeah.
right.
So let's go 87.50. Hope that ceiling holds. So it's saying 13 cents is what we can get on the roll.
Oh,
So we're buying to close the September 18th, 83, 20 contracts.
hold on. I gotta
Yep.
push this stuff in here. Okay, we are on a strategy build with Interactive Brokers. So we're gonna go to the. Actually, I'm on the one we're buying. So let me start with that one.
Okay.
We are, or I'm on the one we're selling, and so we're selling the 87.50
Yep.
for October 16th, right?
Yep.
Okay, I'm selling that one. And the one we're buying is September.
18.
One back, guys. Let's see here. Getting the option chain to work. There we go. September 18th. Okay. Well, I actually started off by putting in the entirely wrong trade. I put in a put. It's a good thing we talk about this stuff. All right. So now we're definitely starting with September 18th, and we'll go back and fix that other one. All right. SEP 18, 83 call, and we are buying that. And then we are selling the OC 16
Yep.
call at 87.5.
Yep.
Selling that one. And we might be positive here, a couple of cents at the best.
Let's try and get at least 11 cents right now.
All
See.
right, we may have to change that. We're looking at 20 contracts, right?
Yep.
And right now it's showing me I've got a spread between making 7 cents and making 17.
Okay. Yeah, let's shoot for 11.
Okay, here we go. Let's shoot for that. And we are on Netflix doing a diagonal call roll from September 18th, where we currently have a call, short call, to October 16th, 87.5. So we're going from the SEP 1883 to the October 16th, 87.5 diagonal roll. We are buying 20 Netflixes or September 18, 83 calls, and we are selling 20 Netflix October 16th, 87.5 calls. We're looking to try to get about 12 cents on this thing. And let's see what happens. Oh, we got, what did we get? Looks like we got 10.
10. Okay.
0.1.
0.1.
Not sure what it's telling me right here. I think it's telling me we just lost a penny or lost 10 cents or lost something.
You want-
Sometimes it shows it that way, Phil. If you go look in your
Oh,
trade
'cause it's a
history on IB, yeah, it'll
diagonal roll.
give you another decimal point.
Yeah. Okay. So I'm showing 0.1. And do we think that's 10 cents?
Here, go. Let me share your screen really quick.
Yeah. Let's take a look at this.
So let's feel. Love the non-intuitiveness of interactive brokers.
Isn't it slick?
So
Hang on.
let's see.
There we go. Okay, here's what it's showing.
If you click on summary there, Phil, it should tell you. Yep.
So there, we made 10
12
cents.
cents.
12 cents. Nice. Right
I
there.
made 12 cents.
There we go.
There we go. All right.
All right, Hunter. 1% A work on that roll. Just for your. So let me share.
I got it in there, man. We're all good.
And so now, just for fun, Phil, just demoing this, roll this trade. And now we've got, where is it? Where is it? There it is right there. And we can see.
Is it tracking our total position across all the trades?
It will. It'll carry our total position across all trades.
God,
Yep.
that's the hardest thing. I'm so glad it's going to do that.
Yep. It will.
Wow.
So, okay.
That's great.
All right.
Good stuff, dude.
We can get rid of this one. Just I'll actually I'm going to leave this. I'll update all this later so that the roll I wanted to demo the roll, but I'll update this so it carries the roll across through 3 trades so we can see it. Okay, so rut trade. We had a 2670 rut that expired out of the money. Let's come back to that. Let's just go to Sprouts. We've got a rocket call at 80 on Sprouts that expired. Did that expire in the money or out of the money?
I've got 8,500 shares right now.
It
Okay,
was
so that
really, really
expired out.
close.
That it got called away.
Did it get called
So
away?
yeah, we had 10,000 right here. So settle in the money. There's our 8,500 shares remaining, and so we can go ahead and sell a put on Sprouts.
Yeah, here we go.
So option
Love the Rockets.
and set 18, 80 strike is giving a 28 Airwork.
Okay.
He was saying that this feels a little bit like deja vu with Netflix rolling
Don't-
up and away
don't-
from it, does it not?
Don't tell me. I didn't even want to hear about it. Gee, brings back all the pain and suffering of, I mean, it's so crazy how much more it impacts me to not get the money we would have gotten on that call if I hadn't sold the call. It's so crazy. I forget all about what we make on the whole rest of the trade. It just, oh God.
Listen, everybody's going to be thanking you in a couple days.
Yeah, absolutely. Here, this thing's going right through the roof. All right, what are we looking at on expiration day?
The September 18th, 24
September
days to
18th.
expiration, 80 strike call.
And we're doing a call or we're doing, oh, we're doing,
Sorry, put. I'm so sorry. Put, yeah, put.
all right. 80 strike put with the stock at 85. Okay, we're looking at 120 by 125 right now. Pretty good volume.
Okay, yeah, we can drop this. I mean, we're still at 125. We're making a 24% work. So,
That's decent.
and if we did this on 15 contracts, which is what we got called out of, that's 120,000 risk capital, net credit of 1.8.
Yeah, baby. All right, here we go. All right. We are selling an SFM SEP 18 80 strike put on how many contracts? Where is it? On 15 contracts. There we go. For 1875 maybe. And that looks right to me. Went through at 125.
125.
Okay, so we've just sold 15 SFM SEP 18 80 puts at 125, Hunter.
Okay, I got it. Thank you.
Cool. Okay. Let's make
Still
sure.
got this, we still got this really long silver call hanging out there.
Yeah. We made a big error on that one. And that one,
Humongous.
yeah, that one expires
Humongous.
next year. So not that'll just be there
Yeah,
for
it's
another 10 months.
that's like a 20 some percent ARORC real, like not ARORC. It was a 20 some percent nominal return, wasn't it?
Yeah, yeah.
Yeah,
Yep.
that's a good one. I like that one.
Okay. All right. The only thing else that we've got, Ulta has an earnings call coming up. I know that.
Mhm.
And so we could look at another rut trade. We had the monthly expiration on Friday. And so let's just take a peek at the
Let's
chart on
do
this. Let's zoom out. I'm cautious on the rut right now.
Me too,
as
man.
we're
That thing is
as
a
we're
rocket ship up, and I feel like it's run its course a little bit.
yeah. And so
How about the SEP 25?
okay. So two floors down. Let me just adjust this fib really quick so I can kind of see where my floors are. I mean, we're channeling up and we've got a
It is
one.
it is right at the top of that channel.
I know, I know. Let me zoom in on that
Uh,
so everybody can kind of see what we're looking at here. So we've got the top fib right here. We just bounced off an all-time high. And yeah, two floors down is 28.14. Three floors down is 27.36. So let's see what we could get if we wanted to look at it. September 25th.
how far down did you get?
And go to bull put spread. And the best match is 27-25, 27-20. Let me just go back and look at that on
Oh
the chart.
man, I mean, I think the floor, if this thing starts to tumble, is down around 2,700 or lower.
Yeah, I mean, old old ceiling back here, 2700. And then we got this 2740 right there. Yeah. I mean, what do you think? You wanna do it and just keep it smaller? Or should we
Well,
hold off?
well, looking at your chart looks very, oh yeah, yeah, yeah. I just wasn't seeing the whole thing. Okay. I thought we were right at the top of the channel on the rut. We're not.
Yeah, not at the top of the channel, but at coming off an all-time high.
Yeah. No, I think we're okay.
Okay.
Yeah.
So we'd be below three floors,
Yeah.
three
I
foot
think
floors.
I think we're okay down there. All right,
Okay.
cool.
Yep.
Let's punch that one in. What do you want to do?
Okay, so we're gonna do the September. Let me go
So
see.
31 days, set
September.
25.
Yep, set 25, 31 days. And we're at the 27, 25, 27, 20. We're below the second floor. We've got a 90, call it a 91 Prob OTM, 14% adjusted, 25 Kelly, and a 49 A-Rourke if we can make 20 cents.
I don't think it's going to make us enough. Oh,
We,
well, maybe it will. I mean,
we,
there's a huge spread.
okay.
It's from 30-cent debit to a 25-cent credit. Big
Yeah.
spread. I think we're going to not get 20.
Okay. We can go up one strike if we need to. That'll still be a good trade. So let's try this one. And then if we can't get it at 20 cents, we'll move up.
Try this one.
Yeah,
Okay.
try this one at 20 cents. And so if we did it on 100 contracts, 50,000, and try to get 20 cents on it.
All right. Looking for that. And we're going to do this for how many contracts? 100?
100 contracts. Yep.
Okay, here we go. We are doing a Russell SEP 25 to 27.25 by 27.20 bull put spread. We are selling 100 SEP 25 27.25 puts. We are buying 100 SEP 25 27.20 puts. We got a limit of 20 cents. Looking for $2,000. Oh shoot, it went through.
There we go.
It went through.
Easy
Good
street for
call,
the
Austin.
win. All right.
Yeah,
So
nice, man.
you
That
got
was
that,
awesome.
Hunter?
Okay, let me
Yeah, I got it. Thanks.
got it back. Okay, good. All right, man. Nice
Sweet.
trade. Wow.
Okay. I think that wraps up trading for today.
Okay, good. Because let me talk about pool for a second.
Okay.
Let's take a look where we're at here. Um, right now I've got 1,000 shares of pool, so it's about two tranches, a little less on pool. And I've got an OC 16 230 call on it. The stock is trading at 186, so that's a long way from getting called away. And I've had just so many thoughts about this as you've gone out there and done all of this legwork, Austin. And and the biggest thing is when you've got a story on a company that's been around as long as we've been trying to buy pool, um, the story was a really good story. These guys were the dominant distributor in an industry that they were rolling up from mom and pop stuff, and they were the low cost distributor. So they could put the low price. They had the lowest cost because of their size. They could go out and negotiate contracts with all of the different companies, pump companies, chemical companies, all the stuff that the pool maintenance people are using, all the stuff that the pool construction industry is using, and they get the best price. And that was a great moat, and it really, really was an attractive company, always sitting at some massive multiple of PE because they just printed money. And then along comes Home Depot and buys a competitor, a little competitor, and says, "Here, have all the money you want and go cut a hole in Pool's market share." And the response, and then Pool got a new CEO. And God dang it, the response from the new CEO was not, "Oh, hey, we're under attack. The moat's being attacked. Let's get everybody on the walls and let's spend money here. Let's fire off all of our stuff that we've got that protect our moat," which is what you do when the castle's being attacked. That's what you do. You don't try to maintain your peacetime profits. You have to fight when you've got a really well-armed competitor like Home Depot. And man, they didn't. They sat there and they said, "Oh, we don't have to fight. Our moat is huge. We have a moat based on how great we are at servicing everyone. We have a big brand moat. Everyone loves us." And they didn't fight. And man, they started to get carved up. And that's what happened with this stock. And now it's kind of like, wow, they've got a big, well-funded competitor. So the story change is huge. They've got a big, well-funded competitor that's willing to lose money for some period of time. And maybe someday, they'll give up on it. Maybe, but maybe they take enough market share in the meantime that Pool isn't the company it used to be. And that's what, is going on. And it is a big story change. Big story change. So it got me to put everything on pause, stopped acquiring the position in the company, and started to think about moving my basis down with big call trades. And that's exactly what we're doing, man. So that's where I'm at. Austin, you pretty much agree. You want to add anything to that?
Yeah, I think that I've talked about this with everybody, but the way that it seems to me is you went from having almost like a founder type CEO in there to a CEO, and I'm referencing Peter Arvan, that tried to do the Wall Street protect the company in the news story. So instead of acknowledging the threat, saying what defense they were mounting, they it just felt like he tried to, keep protecting each quarter, the profits of the company as much as he could. And they were losing customers because big customers care about price in this industry. And I wasn't hearing them talk about losing big customers in earnings calls. They weren't mentioning it, but in my research,
Hey,
managers were
by the way,
talking about
your
how
camera's not on, dude.
managers at stores were talking about how they had lost big customers because of price. And if Heritage raises those prices, I'm really confident those competitors will come back because price is what is driving people around. And if you've got the same price as Pool, I do believe they have the best customer service and inventory and stuff like that in the industry. So they do have some advantages, but to think that you can just not compete on price in this industry, I think is a big mistake, especially with the consumer getting squeezed right now. There are plenty of alternatives to Pool that sell the same products. It's kind of like if Walmart suddenly decided that they were not going to compete on price against Target, okay? They were saying that, oh, our customer service at Walmart is better than Target's and that'll protect us. People would just shift in an instant. They'd go to Target because Target had the low prices. So that's kind of how I look at these industries. And other companies that we've made a lot of money on that had price modes. I'm thinking back to CF Industries. CF Industries used to just publish a chart back when they were going through it, when the event was like full force. They used to publish a chart and they're like, look, we're selling our product at the same price as everybody else. There's a spot price for this, but here's our profit and here's everybody else losing money. And they would just say, they're like, look, as long as we're profitable and everybody else is losing money, we will win this in the end because we have the lowest cost.
Yeah.
And sure enough, as soon as that Ukraine war started and all this pricing started to, rebound, I mean, CF went from like $25, $30 to $100 a share overnight.
Right.
And so, it can revert fast, but it's a little scary with a price moat company not leaning into their price moat.
Yeah.
Yeah.
They have to do it and they're not doing it. So we decided to take a pause here, not unloading. I'm just trying to reduce basis and not acquiring either. We're on a little bit of a hold. So there we go.
And by the way, it's really hard to try to go prove that they have a price moat as well. So you can dig and dig and dig and try to see that unless there's some industry information. All this information, their suppliers and customers, it's all protected, right? So it's really challenging. And they're in the way that they're competing, to Austin's point, doesn't point to the fact that they're competing from a position of strength. It's almost like they're in this defensive position. So it's a little nerve-wracking, I think, at this stage, based on what we know.
Well, Douglas is asking us a really good question. When do you give up on reducing basis and selling calls by selling calls and just sell pool and go to a stronger stock? Well, I got two ways of thinking about that. Number one, if the story changes again, right? Right now, it's like we are on hold to see if they're going to respond and demonstrate a price moat. And and so that's got us on hold. Now, if they just keep not doing it, then that'll trigger a sale. The other thing that'll trigger a sale, and that'll trigger a sale whether we got something to buy or not. It's just like, okay, we're going to pull this. Um, the other way we go for a sale is we're in a hold with pool. We're not sure what they're doing, and then something great comes along that we need cash for. We would close that position and move the money. So, and if those two things happen simultaneously, okay, great. But either one of them can trigger a sale, Douglas. All right. Trev, what's next?
All right. Did you cover everything you wanted to cover on Easy Street, Austin?
I did. Yeah, I did.
Okay. So then it's the one and only Hunter, the Chewy,
Who is
All
going to
right.
talk
spelled with
about,
one E.
yeah.
We're finally getting around to Chewy. It's been on the docket here for a long while, and it's a little bit similar to the type of discussions that we were having about Zoetis, which is another company that we've been looking into here, where we have this industry that's really super resilient towards consumer spending, because that's one of the last items that people will stop spending money on. Usually, they're going to continue even through a recession, through an economic period of economic hardship, are going to continue to be spending money on their pets. And over the last couple of years here, we've seen Chewy, which was at one point probably priced, well, not probably, it was certainly overpriced and was priced more like a tech stock. People were pricing it like an Amazon, and in a way, it is fairly similar to Amazon, trading up at these 100x multiples. And now that number's come back down to earth a little bit, and it's become a little bit more attractive, not only from the position that clearly there was an event here that drove the valuation to fall significantly. That event has just been a continued slowing of growth and of customer acquisition. And the second thing being that their margins, while they're finally profitable, they're not really quite able to demonstrate the ability to really expand those margins over time here. So real quick, we will look at just what this looks like on our kind of key metrics here in Easy Street. I'm going to share my screen. And you kind of notice something that's a little interesting here, right? You have all of these growth numbers that are astronomically high, and that's because Chewy just IPO'd about 5 years ago, which adds another little wrinkle here into how we're going to go about evaluating this business. We like to see a long-term trend, the ability to demonstrate that they can expand margins or at least hold margins at a certain level over time, so that we can feel confident that the mode of this company is in fact intact. And so with that, we'll jump right into it. I'm going to get my presentation up here really quick. Computer's running a little slow, and go into kind of how we go through these businesses. So we're looking at Chewy, and we kind of want to find, what the things are that we really want to dig into with this business. So what we do a lot of times, for those of you that might be new in here, is to look at the business as a whole, and to build what we call a pitch deck on the company that's looking into a lot of the different facets that we like to dig into, and figuring out where there might be weak points in an analysis, so that if we move it on to further steps, we can determine where we want to focus our attention. So the question that we like to ask is whether this is a simple business. And in this case, we think that this is a pretty simple business. What Chewy does at its core is it takes all these products that people will typically go to a pet store to buy. That's anything from dog and cat food to toys to even now including pharmaceuticals and vet care. And they try to package all of that up in an e-commerce platform where it can be sent to your doorstep for a low price. And that's what really drew people to Chewy, especially throughout the pandemic. Obviously, people not wanting to go outside, not wanting to go to stores, they were able to engage in this service that's really cheap, and they get these kind of big, bulky items. Like, we have 3 dogs, me and my wife do, and we order, over 100 pounds of dog food every couple of weeks, and it shows up on our doorstep, and we get the benefit of cheap free shipping, because they have built this logistics operation around moving this kind of unusual type of product. The reason why it's unusual is, it's really bulky. Anybody who has ever sent a package using UPS or FedEx, and it was a large package or a package that weighs a lot, that you usually have to pay up for that, because it's taking a lot of space in whatever container that it's being moved in, or whatever vehicle it's being moved in, and also the weight is a concern for fuel. And they figured out a way to get the stuff from point A to point B really cheap, unlike a lot of their competitors. They have about 190,000 SKUs that they sell on the site, so huge selection that you can choose from, and it's kind of split up between what we call kind of like hard goods, which might be things like toys, things like collars and leashes, into food, treat items, and then into pharmaceuticals, which is kind of the last frontier, that we are looking at there. And whether this business is a predictable business, this is the second question that we want to ask when we're trying to establish the meaning of the business. And this is an instance where we can actually really measure this. A lot of times, you want to go talk to customers, talk to people that are engaging with the product. And in this instance, we know that about 80 to 85% of people that are using the Chewy service are on auto ship. So they're actually not having to go engage with the platform, but they instead are actually getting things sent to them on a regular basis and not having to worry about it. Their credit card simply being charged, and they're able to move on with their life and not have to spend the time actually shopping. So here, I'm going to share my screen again. All right, so this company has a dominant market position right now, but what we're going to end up drilling down on, not to spoil the point here, is the fact that we're not really 100% sure that Chewy can maintain this market dominance, because they have these players that are wanting to come in to disrupt this business. Clearly, we're going to show you kind of how we got to that conclusion later. So it's a big company. They had about $12.6 billion in sales last year. They are exposed to about 41% of the online pet share, and they are the largest, what we call pure play pet products provider. So they're the largest one that is the only thing that they're doing, right? The only thing that they're doing is selling pet products. Amazon has a larger share of pet product sales, but obviously Amazon is involved in a bunch of other businesses. Um, they have 21.3 million active customers. That customer count has actually slowed in recent years, and in the last quarter, part of the event that we saw, we actually saw their customer count begin to actually decline. And this is part of a strategic effort by management to try to target individuals that are actually going to be spending a larger portion of their wallet share, as opposed to people that come in and buy one-time purchases. And like I was saying, a huge percentage of their business is auto ship. Okay, so what's the industry niche here? This is a subscription first model, so that's different from any other online retailer. You can obviously go and buy products from different pet retailers online, but Chewy has really designed the user experience around being able to really tailor a subscription model and have kind of auxiliary sales on top of that. They have a world renowned customer service team. This is probably a little bit of an overlooked component of the business, and it's really hard for us to quantify specifically what the impact of that customer service is on the business, other than to say that, hey, we have this huge subscription model, we have a really high renewal rate, and that is a component of the support system. Is actually something that we looked into when I was in business school. We did a case study on Chewy and their customer support. Anybody who uses the service knows that, for example, on your pet's birthday, they'll send you a handwritten note wishing your pet a happy birthday. Usually we'll send some sort of toy or maybe a voucher for you to go and buy a product off of Chewy that comes with your next auto ship order. Things like that that keep you really engaged and keep you from wanting to move off to another provider that might be offering the same sort of experience. So something to consider here for sure. But the competitive landscape is really where we get a little bit rocky with this evaluation. So, like we were talking about before, Chewy and Amazon are really head-to-head competitors. We don't really know how much Petco and PetSmart are participating in this market, but those are the two competitors that are really, really fighting over this e-commerce section of the market. And we'll go into later. Actually, you know what? I'm going to bring it up for you guys right now. I think this is a good time to show you just where, in this analysis, I started raising some red flags as to whether we might be interested in this business as an investment. Because, I mean, as Rule One investors, we are really looking for something that is really highly predictable, that we can establish a moat on and feel really, really confident that there aren't going to be competitors that can easily come and erode that moat. And I'm not sure if that's really the case here. So what we ended up doing is going in and looking at a bunch of different products on Chewy and on Amazon, and comparing these prices. So these are the Chewy prices that we're able to see here. Auto ship, obviously, they give you a little bit of a discount because they have the foresight to be able to keep that inventory in stock. It saves some money there, and their buy at once price. So if I take this product right here and I go look it up on Amazon, what we're going to find almost every single time is that product is priced to the penny exactly the same. Okay, so Amazon is clearly coming after this market. We can see that. So it's priced at $71.99. Chewy prices it as well at $71.99. Amazon has priced their subscribe and save at $68.39. And would you look at that? $68.39. So I went through and I did this for a bunch of different random products. This was a task that AI was able to help me with. And I asked it, hey, just find me 15 or 20 random products that both of these competitors might sell. And I went through and checked it myself. And sure enough, there was only one there's only one instance where I found a discrepancy in pricing, and it was 2 pennies. So Amazon's clearly coming after this market, or at very least, Chewy could obviously, of course, be setting their prices off of Amazon as well. But they are clearly competing with each other. And at some point, what we need to ask ourselves as the 90% of pet owners have an Amazon account, where only 50% of pet owners have a Chewy account. And at some point, if it gets easier for you just to have one account and order your products off of Amazon, maybe people are going to make that decision at some point. So that's kind of what the analysis is a little bit a little bit focused on from that point out. Now, their competitive moat in general, there's a little bit of a brand moat, a very, very mild switching moat, and a little bit of a price moat compared to other outlets not named Amazon. Mainly, the switching and price moat here are them a low score, low confidence score here, because it's mostly surround kind of the friction that you have when you have to leave your house to go and purchase these products, right? So if you need to go drive to Walmart, drive to the pet store, it's a little bit more inconvenient. It costs you time and it costs you money to go and buy these products as opposed to getting them delivered to your door. Now, the brand moat is likely what I would say is the strongest moat here. And as everybody that's been in here for a while knows, brand moats are we think that they're the weakest moat, generally speaking, and they're really hard to define, generally speaking, as well. And there is a brand mode associated with the customer service, with the recognizability of the brand and the trust in the brand, which is great. You need to have those things as a retailer, but it's not necessarily something that's going to particularly endure over time. So we think that,
Just
yeah,
to
generally speaking, it's a
just to
fragile,
build on
fragile mode.
that, Hunter, just to build on that a little bit, that price moat. Sorry to interrupt you, but the test that we like to do is, does it give it pricing power? So does the brand itself give this company the ability to price its product above its competitors? And I think Hunter demonstrated that right now it does not possess that power. So that really gives us pause. Unless we can couple it with a different moat, brand can be really, really weak, and that's the test we like to use.
Yeah, it's kind of an interesting, relevant conversation to be having when we're talking about pool, right? Because these things are fairly commoditized, or they're at least widely available enough that people have options to get the same product from any different location. That's kind of I guess the issue with retail and why retail margins tend to be so small. This isn't a situation where we have a Coke versus an RC Cola. Most people are going to reach for the Coke because that brand is a lot more recognizable, and they're willing to pay another dollar for a Coke because they know that they like it. This isn't one of those instances. So that's one fairly major issue here. So why the moat has weakened? The ROIC has actually fallen about 60% from its peak. We can go see over here that C has fallen fairly far from its peak, and we see that there's a little bit of a scale and defensibility problem with their margins being so thin that a large, well-capitalized competitor like Amazon could potentially come in and actually disrupt this business fairly significantly. No huge management KPIs. These are kind of typical things that we tend to look at. This is a free cash flow positive company. They recently achieved free cash flow and income profitability over the last couple of years. There is no debt. Which is something that we like to see. They actually have about 860 million in net cash, which means that their cash position offsetting their debt on their balance sheet is at about 860 million. ROIC, I don't know why it's pulling this number in here, is actually at 26%, which is quite high, but it has been falling in the last couple of quarters as the equity number has increased. And the free cash flow trajectory here we go through this stuff, it looks really good. We have free cash flow that has been growing significantly from 2019 all the way through today. And another thing that when we go to price this company that we're going to have to look at is how are we going to build in these growth rates, right? We see revenue growth is fairly modest, but net income growth operating cash flow growth and free cash flow growth are absolutely astronomical. So what we end up doing a lot of times in this situation, um, equity plus growth, all of this is completely obviously not a tenable growth rate over time. So I'm going to look at revenue growth, and I'm actually going to look at revenue growth a little bit more granularly and look at it over the last couple of years. We can see just from the last 3 years here that revenue growth is about at 6%, which might account for what we kind of think of as that COVID hangover. There was a lot of people joining this service during COVID that were starting to get deliveries for their pets, and they held on to the subscription. And people are continuing to use it. Their renewal rate's really high, but they're really struggling to find new customers out there. So when we price this business, I'm going to use probably a 6 or 7% growth rate as opposed to those astronomical numbers that we were looking at, where this is reflecting a 200% roughly growth rate in free cash flow over the last couple of years. Capital allocation, they have totaled about $1.2 billion in buybacks, which is adding some value to the company. But another thing that we kind of raised a red flag, generally speaking, people think of buybacks as a good thing. It's making less slices of the pie out there as a shareholder. But we would love them to see that, especially with a return on invested capital at about 26%, we would love to see this company be able to reinvest in its business and return that capital back to its shareholders in terms of free cash flow, instead of actually just going out there and buying back shares. Okay, so yeah, the primary risks here, for our pest risks, generally speaking, there's some kind of high risks here, obviously, that are going to be surrounding that item that we talked about, which is this Amazon potential interference in the business here. So political risks. Nothing really huge. There's a little bit of tightening in e-commerce, in regulation of e-commerce over, especially in its state level legislations, are making it a little bit more difficult for companies like Amazon and potentially Chewy to really corner the e-commerce markets. That is requiring them to, for instance, use the U.S. Postal Service for deliveries as opposed to building out a delivery system for Amazon. That's something that could happen here. Otherwise, these are fairly low impact and low probability risks here. We see these kind of lawsuits out there fairly frequently, that are pretty frivolous, especially when you see the stock price move from where it was at roughly $80 down to 20 in the last 52 weeks or so. A lot of lawsuits come up about misrepresentation from management. Economic risks. These are fairly large. We keep talking over and over again about how the consumer is very stressed out there right now. We saw this when we were looking at Zoetis, actually. These are markets that we consider to be really, really resilient, right? Like people will once again, they'll spend on their pets. It's kind of this tiered marketing that we talked about with Zoetis, that you have pets. What is it? Pets as employees, pets as pets, pets as family, and pets as children, right? So there's going to be folks out there that have pets as hunting dogs, for example, and there's usually not a lot of money that are going into those pets. It's like the bare minimum to keep them fed and sheltered and alive, all the way up the ladder to get to these folks that are pets as children, and they are legitimately spending as much money on their cats and dogs as they might be on having a child. And that's really where you see these really, really sticky consumers. And a lot of the consumer ladder is really moving up to those higher echelons of pets as family and pets as children, where people are giving an increased portion of their wallet share over time to companies like Chewy and companies like Zoetis to make sure that their pets are healthy and well fed and they're getting the best possible food that they could. And there's also this kind of economic risk out there, that's a lot lower in this case, of just a general recession. People are going to move down. They're not going to use this product less, but they're going to move down in the actual products that they'll buy. So people are going to move from high end pet foods, high end toys, and even the brand name veterinary or pharmaceutical products down maybe to generic products and generic foods, which are a little bit lower margin for Chewy. So it's something to keep an eye on. But this is actually a corner of retail that I would say is less affected by that risk than a lot of other retail might be. Technological risks, we've talked about that, is just these e-commerce competitors coming in. And I've kind of assigned a greater than 50% probability that Amazon's going to continue to hammer this segment, this business in pet care, and try and take Chewy on. And it really would not surprise me at all for several reasons if Amazon ended up actually purchasing Chewy. So struggling margins, Amazon's compounding advantages, those are two things that we see as really high risk in this situation. So the bear case here is going to be that the business is low enough margin that Amazon's able to come in and either swallow up all their customers or purchase them for a really low multiple, which as an investor, we want to own companies that we can own for a long time, we can hold on to for a long time, and are going to continue to compound for us out into the future. And oftentimes it's a great little return. We've done some of those merger arbitrage type investments in the past where we can get a good little return from a company being bought out. But in this instance, we want to hold on to Chewy for a long time and hopefully avoid a buyout. Um, so generally, the news around Chewy has been pretty good. Most analysts actually have a buy rating on Chewy. Some of them having a target price up there at about $40 or $50. It's trading in the mid 20s right now. So the sentiment out there is fairly good, but that is based on, I think, a multiple that is a little bit crazy when you've got revenue growth at about 6%. Right now, Chewy's trading at roughly a 30 to 35 PE multiple. And we expect those margins to expand slightly as this is a growing business. But still, that's a high multiple, and to expect it to be trading up there close to 100x multiple again when it's already a profitable business is a little bit rich for our taste. We see that a lot of times when you have this speculative tech, for example, and sometimes these won't even be profitable businesses. Saw that with Amazon for many years, where it was trading at a high multiple, to revenue, I suppose, since we didn't have any income at the time, or high multiple to free cash flow. But you see that there's the potential out there for it to be a massive profitable business. There wasn't a whole lot of insider activity. There was 500 million shares that were sold in October of 2025, and no notable buying. A lot of times we need to look into this stuff a little bit deeper down the road, a little bit closer to see if these are scheduled sales or if there's actually executives in the business that are selling out of their positions because they've lost confidence in the business. Okay, this is kind of an interesting slide here. Once again, I'm going to continue to hammer the point of what we believe is the largest the largest threat to Chewy is the fact that we have Amazon who's operating at about a 10% margin and Chewy operating at a 2.1% margin. And what that tells us is that Amazon is going to be able to, obviously this is a drop in the bucket with their business segments that they operate. This small pet care corner is a little bit of a drop in the bucket to that e-commerce giant, but they're able to operate at a loss and fund that loss in these small niche markets with what they're doing elsewhere. And Chewy can't do that. They can't afford to take a loss. Once again, this is a conversation that we just had with Pool, so it's a little bit relevant, right? Where we're asking as investors in Pool, hey, you guys are getting into a fist fight right now with Heritage, and we, for the long term, future of this company as investors, we're okay with you dropping your margins below this historical, 12% mark. We're okay with that to stave off the competition, right? You guys are the big dogs in the market. You can set your own prices. Well, for the most part, you at least have pricing and cost rather power with your wholesalers. So utilize that and put these competitors out of business. Amazon can strong arm Chewy in that same way that we are suggesting that Pool ought to do that. They can do that by flexing that muscle. There's some I guess general I guess there's some friction there in the fact that a lot of these products that Chewy sells are actually they're actually have MSRPs that are set by the manufacturer. So a lot of times there's not a whole lot of wiggle room for them to move prices. But still, there is margin there for them to utilize where Chewy doesn't have that same advantage. Okay, so in summary here, we've got a simple and predictable business, but we just really don't like the competitive landscape a whole lot. And it's not like we feel like this company is a screaming good deal at the moment. It is on sale, based on the way that we like to look at things, right? So we've got a buy price right now of, well, sorry, it's not on sale. It was on sale a quarter ago, but we've got a buy price right now of 16, 2, and $15 using a 7% growth rate. This PE is likely pretty low. We have historical average of 40. I think in the future we can get a 25 PE out of this, but still, it's not going to change these prices a whole lot. So that's where we're at with Chewy. We think it's a really good company. It's just in this position that's a really precarious position with Amazon, where we don't know if that competitive edge, their moat, is going to hold up in the crosshairs of a big giant like that. So yeah, was there anything in the questions that we should discuss, guys?
The big thing that I saw was somebody was asking if Chewy sells their products on Amazon. I think they were thinking that maybe what Amazon was selling was sourced from Chewy. And I think Travis, it said, that it wasn't, but we just wanted to
Yeah.
confirm that.
Yeah, the comps that I was seeing is them selling directly from the actual manufacturers of these products for the most part. And this is the Blue Buffalo store with Blue Buffalo food. And that's a lot of that might be what I was talking about, is this kind of required pricing that's set by the manufacturer. But we do know that the logistics operation with Amazon is a lot more capable than Chewy. But one thing to consider here as well is the fact that actually Chewy's management, their CEO, has moved over from operations, e-commerce operations from Amazon into his role at Chewy, which is pretty interesting here that they're trying to replicate that model as best as they can in light of the kind of challenges around the logistics of moving these kind of large, bulky items that a lot of times need to be air conditioned as well. And one thing that the current CEO has taken from Amazon is the automation that Amazon utilizes in their distribution centers. Anybody that's seen those videos of Amazon distribution centers where there's robotics everywhere moving products from point A to point B, that's also being utilized with Chewy as well, where they are able to obviously expand their margins by not having to hire such a large labor force. But anything else?
I don't think
The
there's anything else on that,
there
Travis.
was just one other interesting point that Nicole brought up, that she uses Chewy. Part of the reason why she's using it is that ability to fulfill her prescriptions, and she lives in a rural area. So Chewy provides that extra service of basically talking to the vet and being able to fulfill that prescription and send it to her. So that's a little bit of an touch that maybe Amazon won't do, but I think that's a relatively small part of their business.
Yeah, right now it's about I think 6 to 8% of their business comes from pharmaceuticals. and they've actually dipped their toe into veterinarian offices as well, which is a physical footprint. So now they have I think about 80 locations of physical veterinarians locations, and I think that a lot of the reason that they did that, which is kind of interesting, is in the past anybody who might have used Chewy pharmaceutical would probably have been a little bit frustrated by the whole process because a lot of vets wouldn't allow you to fulfill prescriptions that way, or they would at least make you come and pay for a really expensive visit at their vet's office before they would write a prescription for Chewy. A lot of them get kickbacks from the manufacturers of these pharmaceutical drugs for your pets, and they want to actually provide it in their own location, just like a lot of doctors' offices now. So there was legislation that was signed about, I think, 2 years ago that required that veterinarians must actually be able to write a prescription that's filled elsewhere. And that has probably been a lobbying effort from Chewy to get that done. So the friction is definitely a little lower now. That's probably a segment of the company that we would expect to grow fairly substantially into the future. And yeah, I mean, to Nicole's point, it's if you're in a rural area, that's a huge issue to be able to actually get that vet care that you need for companion animals and for livestock. So, very good point. Yeah, I think with that,
So, Hunter, we've
good.
got Phil needs to come back on. We're gonna do that Lulu stock sale we did. We're gonna
Oh, yep, yep.
we've yeah crossed over the
Sorry, meant
threshold.
to meant to remind you guys of that. I saw that in the
Yep.
chat. So good point. But all right, thanks
Cool.
everybody. Hop off.
All right. Well, we're going to jump right in here. I'm going to share my screen with you guys. Um, so for just everybody who's just kind of showing up for the off of the workshop from this weekend, welcome, and hope you guys have learned a lot in this one class. What we're doing right here is pretty sophisticated, the end of a pretty sophisticated trade. Um, we bought Lulu probably an average of right, I'm going to guess right around 200, and and it went down to 118 or so, and we sold it to basically harvest tax losses by protecting the profits that we're making on other things, and it probably saved us 100 to $150,000. Um, and so the restriction on that trade is that when we sell the stock, we can't immediately buy it back and take the tax loss. And so we have to wait 30 days, which expired around the 15th of August or so. And we've been watching the price. So it's starting to really move up on us here. So we're going to buy the position back now. And I think we can buy it back at almost exactly what we sold it for. So let me see if I can share my screen. Have I already shared it? Can you guys see my screen?
Nope.
I cannot see your screen.
Share
I'll
here.
also reiterate on the front end of this trade that we are definitely not tax professionals. So I would consult your advisor on that. But that is what we're trying to accomplish here. What Phil just described.
Yeah, yeah, we're not tax pros, except Hunter, didn't you take tax 101 in law school?
Yeah, yeah, I did a few brain cells ago. I guess I did.
Yeah. All right.
So,
So
so Hunter's a
sold.
lawyer and a tax professional.
Oh,
This
yes.
is the meetings are going to get really difficult now.
Oh man, yeah. Well, we sold 4,100 shares of this at 118.10, and it looks like we're buying it back at almost exact price. So that worked out pretty good. We like that. Kind of a free 150,000. And so we'll say thank you to the tax rules. I'm going to put that in right. 4,100. All right, so let's transmit this and see what happens here to the price. See if we're moving things around pretty good. I suspect we would be. So what we're doing is we are buying Lulu stock, finishing the tax loss collection trade. I'm buying 4,100 shares back for 484,000. Puts us back to our original position. And there we go. All right, went right through at 118.135. And we are back to our position. Now, the reason we're comfortable with this is because, well, there's a couple of things. We always love it when somebody we really, really respect is buying the heck out of a company we're buying. We always like that a lot. And Michael Burry is just diving deep into Lulu right here. I think he's made it awesome. What is it? 18% of his
Yeah,
portfolio.
he just bought it up to 18% of his portfolio.
Yeah. And so this puts me right there at the same place with the school portfolio here. And I like the position a lot. We've had some impact, minor, really sort of, holding up our stick. That comes holding up our stick comes from an old story about how this village in the Himalayas was getting inundated by rain, and they were so afraid of losing everything and washing down the mountain that all the people came out and they prayed and they prayed and they prayed to God, and I forget which God it was, maybe Shiva or something. And that God responded and ripped a Himalayan peak right out of the mountain range and held it up over the village so that the rain would go around it. And when that happened, all the villagers ran out and held up their stick on the base of the mountain. And the point of that little story is that even though you can't do it yourself, or even though you're not making the thing really happen, it's important for some reason the gods like you better if you're out there trying to help. So yeah, that's where that story comes from. So we're holding up our stick on Lulu. We've done quite a bit to try to push the change in the board, and we got the change we wanted, that Chip Wilson was pushing forward, and we've now got the co-founder of On Cloud Shoes is now on the board, or now, yeah, he's now on, right? Did they do the board meeting?
Yep, he'll be on in September.
Yeah, beyond in September. The new CEO is coming on in September. And also they brought on the woman at ESPN who created the ESPN Women's Network. And they are trying to get this company to recognize what its real power is and get away from the mass market. I think the mass market will take care of itself as long as they keep their brand at an elite level. And we agree with them completely. So we see them having the right direction. It's a huge brand, one of the best brands worldwide, and they're at such a good price right now. So we're going to continue to own this one, and we like it a lot. So that is how we finished up that trade. And anybody wanted to add anything to that? And if not, we are we are good to go. What did Chris just say? They have a new product that's made some news called Big Ass Bag. That's edgy name, right? Feels like Chip Wilson, doesn't it? Yeah. All right, cool. You guys,
Actually, Phil, I am meeting with the person I worked with on that board fight from the PR firm. I'm meeting with them September 15th to get an update. So I'll be able to provide you guys an update on that. There's still some stuff going on in the background, apparently. So I'm curious to find out what it is.
yeah, I'm real curious to hear about that. And Trav has been leading our charge there and is in communication with a number of people, including Chip Wilson's office and the chairman of the board at Lulu. So much appreciation for that, Trav. All right, guys. I think that's it for today. Hope you enjoyed it, and we will see you next week. Time to go play.